Welcome to the Killik & Co podcast for the 7th of July. Just a quick look back at last week. Really some of the key events that we saw were included the non-farm payroll numbers out of the US, which demonstrated much stronger growth in the jobs market. And indeed on the back of that, there has been some pulling forward of the timetable for when they expect interest rates to rise. And that's been pulled forward from July 2015 to around June 2015 at the moment. Indeed, looking at the diary for the week ahead, we do note that we'll have on Wednesday the Fed minutes from the June meeting, and that may just give us a little bit more of an indication of the thinking behind the Fed's policies at the moment around interest rates. Looking further into the week ahead, a lot of interesting corporate results indeed. Starting from tomorrow, officially the US Q2 reporting season begins. As always, it kicks off with Alcoa in the steel group. Their shares have been strong during the course of this year. But coming back more to sort of domestic markets, I can see a few of the house builders reporting. Indeed, this morning we've already heard from Taylor Wimpey. And it's just interesting that combination of more sales but also at higher prices is moving the operating margins up. Taylor Wimpey this morning reporting they've moved from 13% to 16%, but we can see that on Tuesday Bovis Homes and on Thursday Barratt Developments are reporting. Also tomorrow, Marks & Spencer Group. As always, the press are well flagged with the difficult trading on the fashion side with Marks & Spencer at the moment. And indeed, as we move through the week, Sainsbury, that other difficult sector, food retailing at the moment, it's their AGM. And of course, last week we temporarily saw Tesco lurch to a new low for the year. It dipped below 280 very temporarily on its share price chart, but bounced back to 289. But it's certainly really towards the bottom end of the range. Keep an eye on Sodexo. It's a French company, but really main rival to Compass Group here in the UK, which is one of our preferred choices. As we move ahead into the sort of latter part of the week, really the key is going to be the Bank of England rate decision. I say key, not much expected. If there were to be a surprise that they moved interest rates up, then of course we'd expect an announcement. But really we'll be looking towards next week for some more indicative thoughts around the decision and what happened there. So really that's a quick look at the week ahead. Now if I turn to really just some of the charts of interest. Well, I think we have to record the fact that the Dow Jones hit an all-time high as of last week. It broke through the 17,000 level towards the end of the week, as we know that really America was in wind down during the course of Thursday and Friday where markets were closed, and indeed it led to sort of record low trading across many of the other European markets on Friday. So we hope for that to sort of bounce back during the course of this week. Just a few stocks to mention. Accardo had a very strong bounce on the back of their trading update. This is a Killik buy recommendation. And the business reported results that I think on the face of it looked strong enough in what is a challenging market, but it really was the visit afterwards, the management Q&A, that I think gave investors just a little bit more optimism about the way that this group is navigating through the challenging times that's being faced by their more traditional competitors on the high street. Again, a reminder, we'll hear more from Sainsbury tomorrow. One theme that we're picking more and more sort of interest up in is what we refer to as mobile advertising. As really just, if you look at the way that people do spend their money on advertising at the moment, there is a feeling that they're getting it wrong. They're spending too much on print and not enough on mobile. It's increasingly now where the eyeballs are going is onto the mobile screen, but of course much lower spend in mobile advertising. And as that starts to pick up, well, we want to see which companies are going to benefit from that particular trend. And WPP is a player in that market. They've really pitched quite hard in the digital space and on a geographical basis, and that stock is a feature for us in that whole theme. We'd also highlight Google as being central to many themes that are playing out at the moment, particularly as the Internet of Things, the third wave of the Internet, which looks set to be much larger than mobile. Well, Google are well positioned in that whole space, and that share price, as can be seen here, having had a little bit of a wobble during the early part of the sort of quarter. That was on the back of their trading update, has rebounded quite strongly and is getting back close to that 600 level that it breached temporarily in the past. I wanted to highlight just the mining industry at the moment. It's a sector that's been quite a woeful underperformer, and really just looking at how the market has behaved for mining stocks in light of what have been weaker metal prices. So this really, two charts here, both showing a basket of mining stocks. And in the first instance, we have the absolute performance of the mining sector. As you can see there, in absolute terms, they've been coming down. But in relative terms, the decline is steeper because, of course, the markets are generally just gradually moving higher. So the relative performance has been very poor for the mining stocks. But the question is, have we now reached a level where the relative performance is now beginning to change? Certainly in absolute terms, we're just starting to see a little bit of confidence returning to the mining sector at the moment. It came off a bounce in the copper industry. I'm going to quickly flick to the copper price, which saw a 10-day rise on the trot for the copper price, and I'll just go back to iron ore. You can see there that whilst the rise has not been quite so exaggerated, it certainly feels like it's bouncing off the bottom at the moment. So it could be a very early call, it could be another false dawn for the sector. But just going back to that chart, it's that relative call of mining stocks relative to the rest of the market that just may be on the turn at the moment. And so really just a bit of guidance to ensure that one is properly positioned at this point in the juncture towards this sector. It's been out of favour for some time, but of course if we do start to see the mining stocks perform, I suspect that the FTSE 100 index, which is more overweightly exposed to mining stocks than say the S&P 500, could enable the FTSE to breeze through 7,000 fairly promptly if that sector does start to perform. So watch this space. Just finally, sort of a few other charts to mention. I think it's interesting to note that yields on the 10-year US paper rose very sharply in light of the data that we're starting to see out of the US at the moment. It's all coming together for the first analysis of Q2 GDP. The Q1 we know was a bit of a disaster, but weather-related, healthcare-related, both elements perceived to be one-offs, and a net result of that is that they're expecting a very strong bounce back in the Q2 number, and a lot of the element parts are coming together for that. So yields moving higher and back up now to 2.65%, so well off that temporary low, sub 2.5 that we saw recently. That's conclusion of today's podcast. Any questions at all, do feel free to speak to your broker.